Welcome back to Supply and Demand, the podcast where we break down complex financial topics shaping the world. Today, we're diving into CBDCs, central bank digital currencies. Digital currencies issued by governments and central banks worldwide. We will explore real-life examples of countries already implementing CBDCs, how they affect financial freedoms, and what the future might look like if every government adopted them. Let's start with the basics. What exactly are CBDCs? A CBDC is a digital form of country's official currency issued and regulated by its central bank. Unlike cryptocurrencies like Bitcoin, CBDCs are centralized and backed by the full faith and credit of the issuing government. What are the key features? Centralized control, issued and regulated by central banks. Digital ledger, transactions are recorded digitally. Legal tender, recognized as official currency. Programmability, can be programmed with conditions like limits on spending or usage restrictions. CBDCs aim to modernize the financial system by enabling faster, more secure and traceable transactions. But at what cost? Let's explore where CBDCs are already being tested or implemented. Of course, China, digital yuan. China leads the CBDC race with its digital yuan pilot, already used by millions in cities like Shenzhen and Shanghai. Consumers use government-backed wallets for every purchase, with major retailers like McDonald's and JD.com accepting the currency. In Bahamas, cent dollar. The cent dollar became the world's first official CBDC in 2020. It aims to improve financial inclusion by enabling residents of remote islands to access digital financial services. Another country, Nigeria, introduced enaira. In Africa, first CBDC launched in 2021 to boost digital transactions and reduce reliance on cash in Nigeria's economy. In Eurozone, the digital euro is upcoming. The European Central Bank is developing a digital euro, expected to launch by the mid-20s. It aims to complement cash while offering secure, fast payments across the euro area. Sweden's e-krona pilot addresses the declining use of cash in the country, ensuring that the central bank retains control over the financial system. Let's have a look how CBDCs impact financial freedoms. CBDCs promise efficiency and security, but there is a growing concern about how they might limit financial freedom. Number one, potential restrictions. Surveillance. Every transaction is recorded, reducing privacy. Spending control. Governments could impose spending limits or restrict purchases. Negative interest rates. Central banks could implement policies like automatic deductions to encourage spending during recessions. For example, in China's digital yuan pilot, the government tested expiration dates on the currency to force consumers to spend within a set time frame, a clear example of programmable money limiting individual control. Of course, there is a dilemma. While these features could help combat fraud and tax evasions, they also raise concerns about government overreach and financial surveillance. Now, let's have a look at the advantages of CBDCs. Despite these concerns, CBDCs offer significant advantage. Number one, financial inclusion. CBDCs could provide unbanked populations with direct access to digital financial services. For example, the Bahamas cent dollar. Number two, faster payments. Instant cross-border transactions with reduced fees. For example, proposed digital euro for seamless European payments. Number three, reduced fraud and tax evasion. Transparent transaction can curb illicit financial activities. Another one, monetary policy. Central banks could react more quickly to economic crisis by distributing digital currency directly to citizens. Let's have a look at disadvantages of CBDCs. Number one, privacy concerns. Governments could track every financial move citizens make. Another one, loss of banking jobs. Direct-to-consumer CBDC systems might bypass commercial banks, threatening jobs in the financial sector. Another one, cybersecurity risks. Centralized digital currency systems could become prime targets for cyber attacks. Another one, reduced cash use. A fully digital economy could marginalize those who rely on cash. Now, let's have a look at the future of a global CBDC economy. What if every country rolled out its own CBDC? Let's imagine the world 10 years from now. Cashless societies. Physical cash might vanish, with all transactions happening digitally. Cross-border integration. International trade could become seamless with CBDC-backed global payment networks. Financial services could be reimagined, blending decentralized finance features with the government-backed security. Another one, economic stability or control. Central banks could stabilize economies during crisis, but might also exercise unprecedented financial control. Final thought, CBDCs offer both promise and peril. They could revolutionize the financial world while raising significant concerns about privacy, control, and freedom. As governments and central banks push forward with CBDC's projects, understanding this dynamic will be critical for businesses, investors, and every citizen. While CBDCs and government total control can seem like a daunting prospect, stay tuned, we have a solution coming. Thank you for tuning into Supply and Demand. Subscribe, like, and hit the notification bell for more deep dives into the evolving world of digital currencies and global finance. Until next time, stay informed and stay ahead.